Hi, my name is Wendi Standley with eXp Realty. I am a real estate advisor and have been for the last 18 years. I've also been an investor and am mostly in fix and flip, but I've also had a couple buy and hold properties. This channel is going to be dedicated to helping people learn about real estate investing. And we're going to talk about different strategies on how to grow your wealth through real estate. And depending on what your situation is at the moment, you may want just passive income, but want to be completely hands off, or you are getting started and you want to do the fix and flip strategy, or you want to do buy and hold. So we're going to learn about all those different strategies and some of those acronyms, and I'm going to try and bring you as much value as possible. So I talk fast and I apologize. So as I post these, if you want, give me feedback on stuff, that would be awesome. Or if you have any questions, you can just message me. So today I'm going to give you an overall of the different strategies that you can do in building your wealth in real estate. So there's the people out there that just want to do the fix and flip, and they go find a property that needs a little bit of love, deferred maintenance, or just maybe it's an estate and it just needs a little bit of updating. So they buy it for below market, and then they turn around and sell it for a profit. There's that strategy. And then there's the buy and hold, or BRRRR, which is buy, rehab, rent, and repeat. So a lot of people will do the buy and hold, and they love to do the buy and hold, and they buy, again, a property that maybe needs a little bit of love, has low rents, and they go in, do a little bit of rehabbing, raise up the rents, and now they've got equity in their property. And then they sell in a few years, 3 to 5 years or 10, whatever their strategy is. Then there's the people out there that just want passive income, and they can be accredited investors, but they don't know what they can do with their money. And with the stock market up and down all the time, and everything that goes with being in the stock market, you can people also will invest in what they call a Delaware Statutory trust. And a Delaware is a trust that you can go into and take your money, and you have to be an accredited investor, and there's certain limits there. And you can go in on a trust to buy different real estate investment properties. So instead of joining the stock market, you take that same money, sit down with your qualified intermediary person, and you choose which properties you want, and you can get your return on investment anywhere from 5% to 15%, depending on the risk level. But as a whole, real estate is a lot less risky than the stock market. And then there's what they call syndications, and there's also real estate investment trusts. All of these will help you. All these different strategies are helpful as you go through your years of growing your real estate portfolios and building wealth through real estate. So your best bet is to go out and find a real estate advisor, a financial advisor, a CPA, and an attorney, and help them have all of them work together to guide you through what your retirement goals are. I'm mostly going to specifically talk about Delaware Statutory Trust today. Again, you need to find a person that could be a good qualified intermediary person that can guide you and give you, they vet all the properties, they make sure they have all the performance done, so you know exactly what, if you invest this much, this is how much you're going to get on your return on investment. So a Delaware Statutory Trust. So if you're an investor or a property owner that's tired of being a landlord, you're tired of managing trash, tenants, and toilets, and you want to sell your property, but you don't want to deal with the tax event that this is going to cause. What do you do with your money, and how do you avoid paying all those capital gains that you're going to have on this property? So this is where the Delaware Statutory Trust comes into play, syndication, and a real estate investment trust. But I'm going to just specifically talk about the Delaware today. So the Delaware is basically a pass-through entity that is similar to a traditional trust, and then it allows you to hold and manage assets for the benefit of others, but it has key differences. So you have a qualified intermediary. You tell them, I've got 3 or 4 or 500,000 I want to invest, or $1 million or 2 million, whatever it is. And I want some risky properties. I want something that's a guarantee. They'll sit down with you and give you a list of the properties that this trust is managing. So instead of having trash tenants and toilets, now you are giving this to an asset manager who is going to tell you, these are the properties that I have. I have a mixed use. I have a mixed use commercial. I have a retail. I have an office, an industrial, or I have a large multifamily. And you can put in your money. You can choose which projects you want and how much you want to put in each property. And then they will tell you how much your return is going to be. And now you're just collecting a paycheck. You don't have to manage anything. The asset manager is, and you pay the taxes on what you get on a monthly or quarterly basis, depending on how the trust is set up. And that's what a Delaware is. So you can do a 1031 into a Delaware exchange. You can go in that, and then you can just keep doing that until you get to, and then figure out your end game and how you want to get out. But Delaware just keeps you, no matter how old you are, the Delaware is a great investment strategy for growing your real estate portfolio and building your wealth. And depending on what kind of an investment trust you're in, you can be in for 3 years, you can be in for 5 years, you can be in for 10 years. But it's not a long-term commitment. And that is basically what a Delaware statutory trust is. But you need to work with your team, which is your real estate advisor, your wealth or financial advisor, your CPA, and sometimes the real estate attorney, just to find out what is the best direction for you and what your goal is at the end of the day. For me personally, here in my market, multifamily is what everybody does in my market, because it is the best return on your investment, and you can buy properties below that are fairly inexpensive and get a great cash flow. So that's what a lot of people are putting their Delawares into, but they are worldwide. And that's the great thing about a Delaware. You're no longer stuck in your local market with all these competition. You have the money, now you want to invest it. So how can you invest it? And especially if you're brand new and you have a job that gives you a 401k or health savings plan or whatever, but you want to keep growing. So a Delaware is great because you can invest anywhere in the United States or the world that you want to invest in, as long as you have a trust that you can invest in. And you don't have to manage it. There's nothing you have to do. You just collect a paycheck. And that is probably the best thing, especially since multifamily and mixed use commercial are a very hot commodity right now, because that is the one industry that's not changing. Everyone has to live somewhere, especially with the shortage of inventory and interest rates. People are renting. And so in mixed use commercial, again, is what is the new thing, because people are buying instead of city centers and building huge malls, they're building strip malls, or they're building villages that have bottom level. You need to have retail or coffee shop or restaurant, and then upper floors are office space or condos or townhomes or apartments. So those are all growing in popularity because the mall is kind of 80s and 90s. I miss going to the mall, but I haven't been to a mall in 15 years. So I go to strip malls. And so that's kind of the way things are going. So that is what's great about a Delaware Statutory Trust and why I wanted to talk about it. It really excites me to think about all the opportunities you have as a Delaware with the Delaware. And I'm affiliated with eXp Realty. So if any of you, no matter where you are, if you need assistance, I have a person I work with locally, but he works anywhere in the United States. He has different Delaware trusts that he works with as well, and intermediaries that help find the projects. And so the Delaware can be as creative as you want it to be, or whatever your income is. So if you're 25 and you want a 15% return, that's a lot more risk. So, and it may take you may not see a benefit from it for a year because it's a build ground up or whatever, and your money is just sitting there. So for more information, I'm going to just leave my email at the end of this in the notes, and you can contact me if you have any questions. It's just basically every week I'm just going to dedicate myself on this channel to giving you value on different options that you can use to and grow your portfolio every week. Thank you, and I will see you next time.